Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, bringing to you our weekly stock market analysis for August the 4th. Yes, ladies and gentlemen, we are in the downslope of the summer season. I can't believe it's August. Time has just flown by pretty quickly, and a lot of movement in the market this week. Almost all of your indices were down pretty significantly week over week, with the S&P 500 being down just 3% this week on a heavy week of economic news and macroeconomic news. This past week, stocks saw their worst week this year, with worries of escalating trade tensions could further slow global growth, as well as the Federal Reserve cut interest rates for the first time in a decade. Citing some global economic uncertainty, the market reacted rather violently in reaction to the statements from the Federal Reserve that there may not be additional rate cuts toward the latter part of this year and going into next year. So the market definitely did not like that position. That came out on Wednesday, and the President of the United States came out with some information around China tariffs, implementing an additional 10%, which is equivalent to about $300 billion on Chinese goods, which caused the market to continue to move in a downward trajectory on Thursday and closing out the week on Friday down. So the SPY, which you have in front of you right now, was down 3%. The tech-heavy Nasdaq was down almost 4% this week. The Russell 3 and the Dow down about 3% as well. So pretty aggressive week in regards to the bears stepping into control of the auction to begin the month. This could be an indication of a larger pullback. However, the bulls did step in toward the latter part of the day on Friday to take advantage of lower prices coming into value. So, as well as Friday was the July jobs report, which did confirm some additional labor market strength and the U.S. economy. So a little bit of a push-pull there, very similar to the information that we've been passing on in the last few weeks. But we will see if the bears can take control moving forward. So we'll jump in, as always, starting out with the S&P 500. Given that it is the first of the month, we'll take a few steps back and look at the action over a longer period of time to help us come up with a hypothesis moving forward for the rest of this month, as well as we started off on the week. So we have a 3-year monthly chart in front of you, the SPY, which is the ETF for the S&P 500. As you can see, our monthly bar starting out on this past week, we saw a new lower low in regards to breaking our previous low for the S&P 500 coming into last month. As we did state in our last week's video, we did see a little bit of equilibrium, both with the bulls and the bears closing out this month with a relatively balanced price action where we opened and closed relatively similar in price. And we did see that low of this previous month being broken, and that is a clear signal towards the market that we will continue to see lower prices. So we do anticipate, at least on the monthly chart, longer term players seeing this as a selling opportunity as traders would come in to short below this last month's close in this level here, roughly at the 270 level. So these next few days will provide us a little guidance on if there is what we call follow through, where we see the market moving in one direction, and is there a continuation in that same direction downward. So we do see this as a sell signal, for the monthly. However, if we do change the lens a little bit shorter, as we always look at the weekly charts and make a lot of our decisions more so on the weekly, we do see an opportunity for a shorter term pullback as we approach the point of control. And as if you recall in our video, if you haven't watched our video on market profile and volume profile, please take a look at the details and definitions associated with that. It really has an opportunity to give you a very strong edge in regards to the market. And there is a huge opportunity for us for at least a short term. We're looking at some action where the SPY did approach the point of control, which is the highest volume over this time period, and did look at a nice little reversal as we did approach the 20 period exponential moving average on the weekly side here in the green as a potential short-term reversal. So we do anticipate the front side this week, the bulls looking at an opportunity to buy at cheaper prices for a potential bullish continuation from a pullback. However, there is an opportunity for us to continue to pull downward as we come into value at these levels here, and down here at value area low is an opportunity for us to really gauge, is this a fair price for purchase or is this a fair price for selling? So as we approach this point of control, it's both a balance and equilibrium here. So our hypothesis as we begin the week is a little bearish continuation downward. However, there is an opportunity to the bulls to kind of step in with this broader trend that we've had over the last year plus. So we will continue to watch the SPY as we look to see if there's some opportunities for this downward movement to be reversed. So what our recommendation is just kind of watch the flow and take advantage of opportunities. If you do see something that aligns with your hypothesis, please take advantage of it, as the overall trend is still continuation of a longer uptrend. And we do feel that this is just a shorter term pullback and looking for opportunities to step in from a long perspective, roughly about the 286 and the 283 level. As you can see here, we have a nice low volume node where there is no volume, and this is a potential opportunity for rejection to continue on forward if we do pass down below the 289 level, which is the 20 period EMA. Next up, we'll move on to the Nasdaq, and we'll start very similarly and do a monthly review as well, trying to provide a broader context. As a little nugget, as you look and analyze charts, you always want to begin to look at a broader lens. Number one, as we've always stated, to try to determine who is in control of the auction. Obviously, the last few days, the bears have stepped in pretty aggressively, but is this just a shorter term pullback, or is this a longer term opportunity for the bears to try to reap some profits as well? So if we look at the Nasdaq, very similar to the SPY, we have seen pretty aggressive selling over the last few days on relatively strong volume, and we have seen additional lower lows that we have seen on the monthly chart. Very similarly to the SPY, we have seen this relatively strong trend line broken and a close below the close of the previous month. Now, obviously, we just started the month, so this could be an indication of a longer term pullback, which the monthly players will take a look at as a continuation. However, if we zoom in to the weekly level, you would see that this is an opportunity for a relatively short pullback for the bulls to kind of step in. So we will watch very consistently over the next few days to see if this is an opportunity for the bulls to step in. As you can see, a very strong pullback, pull forward, pullback, and then a higher high coming off of this. But as we have seen over the last few days, this is a potential opportunity for the bears to step in, and we do see a downside target that we'll be highlighting on the weekly chart if we shift over, as well, to potentially move downward toward the point of control, very similar to the S&P 500. As you begin to increase your knowledge of the markets, you will see that there's relatively strong correlation between one index versus another index, and they sometimes tend to float together. We do see this with the S&P and the Nasdaq over the last year or so, that stocks continue to kind of oscillate together. One big interesting note is with all the selling, we did see last week, we did not breach the 20 period moving average on the weekly. As you can see, we have seen a high volume node that was relatively close, that was not touched. So this is a subtle signal that the bulls have overridden the bears in the short term, because if the full bears were out, the selling would continue down to very visual references, and we have seen that not take place. So sometimes when the market is doing one thing, you want to begin to analyze, well, what is it not doing, which could give you indication and clues with your hypothesis to try to move forward. We do see some opportunity to step in from a bullish perspective, roughly about the $181 level as a potential opportunity, and this coincides directly with the point of control if we do breach the 184 level for the 20-period EMA. Now, in our strategy, we do see this as an opportunity for a shorter-term bullish reversal, and this could be what they call as a bull trap, is that very visually, bulls step in at a very key level and retrace back upwards in this area to potentially look for a reshort for the longer-term players to be able to bring down the price back into value. So as we look to the front side of this week, we would look for some type of pushback upward into the 188 level and do a test of value here, and then that potentially would give us an opportunity for a reversal right back down into value. So we will watch this over the next week and provide some additional guidance, most likely with a midweek video. If you do like what you're seeing, please provide some feedback below and take an opportunity to click the like and subscribe button just below this video. With that, we will move on to our IWM, and we will pull back the lens as well and look at our 3-year monthly as well. As you can see, the IWM has been in a very, very aggressive consolidation over the last 6 to 7 months, which is an opportunity for a relatively aggressive move, albeit upward or downward. When we see stocks that begin to oscillate and provide a push-pull type reaction, anything can happen. Now, this could move in this direction or it could move in this direction. Obviously, based upon the S&P 500, the Nasdaq, the IWM tends to lead in the opportunities because it moves a little bit slower, but it also gives us a clear indication of overall market direction. And we do feel that if there is a breach of this 20-period moving average on the monthly, this could provide a very strong sell signal for the bears to push this all the way down to the point of control with a very large pullback closer to the 137 and a half mark. So we will continue to watch this. Obviously, we have seen lower lows and lower highs, very similar to other major indices, and we will watch this as we look to the front side of this week and to determine if there is an opportunity for continuation. We have seen on the weekly, toward the latter part of the week, a nice bounce relatively close to the 50 period, which is a pretty aggressive longer-term play for those intermediate-term players. So you have longer-term players, large institutions, intermediate-term players, which institutions as well as shorter-term traders that are looking for swings to track the 50-period moving average. Additionally, you can see a little bit more of an indication of exactly where we have been in regards to a consolidation. So we did move toward the top end of the range, and we can see very clearly that the auction was rejected at value area high, and that is an indication that the bears are in full control, pushing and trying to pull downward in price back into value. So we will look toward the latter part of this week. If we do see a breach of the 50-period moving average, it is a clear indication of a bearish move, as well as if we do see a close of this upcoming week's bar below 151, we do anticipate a downward move all the way back down to 141 toward the end of this upcoming month. So as always, please take advantage of opportunities if you see it, and it's your money and it should be under your control. But we also advertise with our students that there is an opportunity. Take it, but make sure that you have your risk under control. There is nothing like just purchasing blindly or selling blindly. Make sure that you have something that's well thought out. And we will conclude this week on the Dow, the DIA. We'll start off with the weekly as always. As with the other indices, you see we have breached our previous month's low, and we did, for this previous month, as we did state in our last weekly video, we did see some very solid indecision and some inconsistencies with price as we closed in what we call a doji bar here, which is a balance between both the bulls and the bears, which is a potential indication of a trend reversal. And we did definitely see that with our downward movement across the board in the overall markets in the U.S. Granted, those movements downward in price have been associated in regards to news. However, if we look at the weekly, we do see an opportunity that institutions did take advantage of the downward price movement and purchasing right at the 20-period EMA. So as you begin to continue your journey of understanding the markets, you will realize that the moving averages are very, very key visual references that the algorithmic traders do take full advantage of. If you are unfamiliar with moving averages, don't hesitate to take a look at our video linked below on moving averages. So we do, with our strategy, we do see this as a potential buy signal for the DIA, as we have come below the 20-period moving average and have come back above it to see a very solid close. So this could be an opportunity for a swing downward to come right back upward. But we do want to watch to see if there is continuation and follow through on the front side of the week. So roughly about Wednesday period, we will continue to look at this as an opportunity to take advantage of this downward price movement as we've come back into value and prices have decreased. We'll try to keep this video short, right to the point. As always, it is our pleasure to provide our hypothesis and market analysis for upcoming weeks. And if there are some opportunities that you have taken advantage of, you've seen some strong returns, please provide some feedback in the links below. And don't be afraid to email us and provide some feedback and help us grow our channel as well as grow your knowledge. As with always, this is Carl A. Smith, aka Dr. Cash. Don't forget to follow us on our Facebook page, which is linked directly below. And it's your money and it should be under your control. Take care.